Hello everyone, this is Own Wall Street. I am back and doing the public videos once again in a different format. So what I'm going to be doing going forward, instead of having separate videos for each subset that I'm analyzing, I'm just going to be combining them all into one video to make it easier for myself as well as all of you to get the information you need as quick as possible without having to go to multiple videos. So I have taken a little bit of a break. Was quite overwhelmed with the amount of demand that I was receiving from members signing up, as well as my own personal life. Just a bunch of things happening all at once simultaneously, to the point where I just could not possibly have any more bandwidth for doing public videos at the time. And I'm actually in the process of revamping my website and services offered so that, again, I could maximize my efficiencies within my own personal time, as well as what I can provide for everybody on my YouTube subscriber base, so to speak. So going forward, videos for YouTube and all of you will be provided every Sunday ahead of the open of the futures markets. So look for those videos, subscribe to my channel. I will be implementing them going forward from obviously today going forward. Sunday only analysis provided to all of my YouTube subscribers. Members, they do also get a week ahead outlook as well, but of course there's going to be much more detail provided, and I'm spending more time going over the specific price locations. And as far as the YouTube base, I will be going over just a more general base, but some of the things that I am looking for as far as opportunities are, I will identify. So that being said, it's good to be back. Sorry that I had been gone for so long from all of you. Some of you had posted, and I appreciate your concerns. Everything is fine. Just had a lot going on. As I'm sure everybody understands in life, there's just times where you have X amount of bandwidth, and I just had no more to give. So that being said, feels good to be back. Look for more videos to be posted from me. I will be going forward only on 4 pairs for the public, and that's going to be the dollar index, going to be doing gold, going to be reviewing crude oil as well as natural gas. So just sticking with 4 basic pairs, and that's what I'm going to be providing for the public. Members, they are going to be getting a total of 8 different pairs. It's going to be covering a multitude of different things, which I'll point out in the future, as well as doing a weekly recap for all of the YouTube video subscribers, how many points that we've made per contract that we've traded, etc., just so that everybody knows the type of performance that members and myself are getting from the analysis that I do provide. So that being said, I'll shut up now and just go ahead and get into a nice clean analysis here, trying to keep it as visually appealing as possible here. Looking at the dollar index daily time frame, took the low fib here from around that 88 mark all the way up to around close to the 98, which is around 97.70. The 23.6 fib level has been our support zone for quite some time here, breaking it a couple times to the downside, unable to pierce above the 97.70s. And again, near term, we have started to kind of break again, reclaim this broken trend line here, and now trying to push outside. So what I'm expecting here, and just don't mind these right here for right now. What I'm expecting here is, after we do have a nice little bounce into the 96.60 area, I believe it is, I'm looking for another push to the downside, possibly see another move into around 96.50, and then probably going to see a breakdown in the future. Now, I'm not saying that's going to be this week, next week, or the following week. I'm just saying that the long-term picture does indicate that we will be returning back into that 38.2 fib level. When exactly that happens, obviously, I'll keep you all posted as that does occur. So that being said, I'll shut up now, drop into the 4-hour time frame a little bit, and zoom in and show you exactly what I'm expecting. So again, we have this nice little bottom that was put in around that 95.18 area, pushed right back up, looking like an inverse pattern here, inverse head and shoulders. We did get that break. Now we're looking at a little bit of consolidation here. I do believe we do see a base near the 95, 96, 90-ish area, and then we should have another bounce to push back up here into resistance around that 96.60 to 96.70 mark, and then probably start trending within this overall trend line. Now, as far as this trend line, it is just based on one point at this point in time. You could obviously take and make an aggressive, trend line going up in such a fashion, then you'll have the breakdown and so forth. But I do think that we're going to see a little bit of a break again, respect back down here once we have the failed breakout up here around that 96.70. So I do believe near term we're going to be looking at the dollar trying to push to the upside. Probably has to do with what we're seeing with the Brexit debacle, and again, If you're not aware of what's happening with the Brexit mess, and I'm going to call it mess because it is a mess, do believe we're going to see. I mean, a lot of people are calling for around a 20% probability of a hard Brexit. I'm going to go ahead and say that we're looking at like an 80 to 90% chance of a hard Brexit taking place. I don't think that they're going to get a deal done with May on that deal that's already failed twice. That deal has not been well received. I've listened to some of the debates, at the House, and it just isn't good. It doesn't look good, and the EU is not willing to really sit down and carve out new deal type of a situation with time running out for Brexit to get a deal together. I'm fully expecting to see a hard Brexit situation, and again, that is going to add weight on the pound, and that's going to inversely give strength to the dollar index as a whole. So, how far we go up remains to be determined, but near term, I am expecting 96.70 to be hit. So that being said, I'm going to go ahead and just move forward here. Take a look at gold here. And gold again is moving pretty solidly, I would say, overall in line with what we're seeing with the dollar. So we could have a situation where we do have dollar and gold rising as we do see those bids, those safe haven bids start getting hit. So in the event that we do see the continued support around the 1308 level, we should start to see, the price of gold continue to try to carve out a nice little bottom along this trend line and try to push to the upside. Now I'm giving it a little bit of a possibility that we could break down here, and if we do, 1307 break leads you to try to carve out support around that 1300 area. Seems less likely that that's going to occur. I do think that we are going to actually catch that bid support, as I said, around maybe this 1309 area, and then if we do get, and again I'm just going to kind of show you some of the things that I look for. If we do get a break outside of that little wedge here, then again look for that support to be made along that 1311 mark, and then look for again another pop back up into around 1330 or so, a little bit of a break, and then another extension move upside. It all depends on what happens with this Brexit situation. Failed trade deal with China is what I'm anticipating also. Again, it's been a little while, so I think we're going to see, if we do see a trade deal, it's going to be weak if it does close, or other situation is we just don't get a good trade deal at all, or everything just falls apart. So that's the way I'm looking at it right now. I'm not a news trader, but these are the things that everyone else is focused on. So obviously I have to have my own outlook and look at what the price action is telling me and try to put the stars in alignment, so to speak, so that I can make good trades going forward. So I do think that we are going to see gold move up into the 1330, possibly start pushing up into 1350s, even though we may have a near-term rising dollar situation. So bids to safe havens is what's the main focus. And again, as some of you recall from several months back, I used to reference the dollar yen pair. Keep an eye on that as well, because that'll point you in the right direction as well. So just a little clue there for all of you. So let's go ahead and move forward with crude oil here. Not going to spend a whole heck of a lot of time. We do have crude oil starting to weaken after hitting that $60 mark. And as you can see here, I'm kind of already anticipating a little bit of further downside maneuver here. I think that after we saw this little break here, we did end up pushing down into around that 58.32 level. I don't think that that's the end of this move to the downside, and the main reason is if you look at your weekly time frame, which is a really good way of doing things. I myself like to swing trade more than day trade, but I do obviously take advantage of day trades when possible. So looking at the overall weekly chart, you take yourself a weekly reverse fib here from the recent peak around that 77.50 all the way down to the recent lows here, and you're looking at a 50 fib level push. So it was unable to get outside of that level here. We've been kind of trading within this narrow little wedge as we've been going up, and again I do think that we're going to start pulling back down here and ultimately heading back into the 51.45 level. Now there are several things that need to occur along the way down, so I'll go ahead and delete that. What you really want to see here is a break below this 57.50 level, and then we'll start pushing right back down into the main support on 55.53, and then onwards back, as I said earlier, around that 51.45 area, 51.50. So I do think that oil is pretty much topped out for the near term. It does look like it wants to continue to go back down, and near term, as I said, going to have to wait and see. 57.60 breaks down, then we'll be targeting down into the 55.50 area, probably chop around in this area a little bit, and then break down once again into those 51.50s. And natural gas, I haven't again provided that analysis recently either. But in looking at this overall price action, again, it's a cleaner chart here. Different view is shown to members, but what I'm seeing here as far as this overall move, we had a pretty nice little bounce off of the lows here, went back into that channel. I'm sure some of you remember the 280 to 290 ish area that I had previously said was we were channeling in. Obviously, it's not on this template. This is a totally different template from the other one that I was previously referencing in my videos months back, and some of you that are new will have no idea what I'm talking about. So I would suggest going back, looking through the natural gas playlist, reviewing some of those videos, and then you get acclimated to the trading range between, I think it was around 277.8 to around the 299 level, where it was a window that we were just trading within. And I can just point that out real quick to some of you again that are newer, which was basically, again, looking back here in time, where we spent that 275, I think, to around the 299 area. So we spent a lot of time within this general window, just in that trading range. And then, obviously we saw a breakout here, which was a crazy short squeeze, and a lot of people got fried on that one. I was not one of them. Then again, I wasn't exactly trading it at that time either. So, again, just to reiterate, folks, use your stop losses. I mean, I can't tell you how many horror stories, people blowing their accounts up unnecessarily. Develop a risk, management system where you just know you're risking X amount of dollars to make X amount of dollars plus, right? You never want to, blow your account out over something silly just because you felt like, oh, this was going to happen or that outcome was going to happen. Set a nice tight risk reward system, at least a 2.5 to 1 ratio, which means that you're, looking to risk, $1 for every 250 or $3 that you're looking to make, for example purposes. So myself, when I'm trading S&P futures, I do a tight strategy that I use, which is I only risk 1 point, so that's $50. But $50 risk versus 500 plus, because my target is around 10 points on average, then you're looking at $50 to make 500 plus. That makes sense. I can get stopped out 3 or 4 times, be minus 200, and then make one, nice little swing and make all of it back, and then some. So I have a net positive return. So the less you lose, the more you make. That is a solid structure right there, and that's the key to it. So if you're not very familiar with how risk reward works, what a good risk management system is, get familiar with it, because until you get that down and can control how much you're losing on any given trade, you're never going to be successful as a trader. That's just the reality of the business. So anyway, back to the natural gas. So looking at natural gas here, we've had a nice little pop up. We tried to get above that 290 area, didn't work out. Again, we're starting to break down once again, and I'm going to have to jump out to the 4-hour time frame here. Just cut this out of here too. So again, we had a nice little uptrend here that we were trying to put in place, and now we're resisting along this downward trend line. You can go ahead and break this as well and put in a fib here to test or measure, from the top to the bottom here. And what I think we're going to end up seeing here is another return to these lows, try to bounce back up here maybe, and then we'll try to break down further again, most likely heading on back down to 260-ish, maybe even down to 250 in the upcoming weeks or so. But again, that's putting the cart before the horse, so to speak. So near term, looking for that price action to kind of bounce up a little bit, come back up and challenge the 280s, and then looking for that move to test the recent lows around that 273 level, most likely, and this week, most likely heading back into around 270. So just subscribe to my channel, folks. Every Sunday evening, before the market opens for the week, I will be putting out these following 4 pairs: dollar, gold, crude oil, and natural gas. And if anybody has any questions, as always, feel welcome to send me an email, thetradersperspective@gmail.com.